may have noticed that there's not much activity in the bay or on the wharf today, and that's because Australia's trade has collapsed. So we've got the latest data out today for September, and what we've seen is exports down 6%, imports down 2%, trade surplus down 10%. And another interesting 10% number is if China reduces its imports from Australia by 10%, reduces another 10%, and our imports stabilise around where they are, then Australia is not going to have any trade surplus to speak of at all. And this is one of the reasons why I've been warning that the Australian dollar could be in trouble. And I've put out a report this morning, the written report, which is on our research news page on our website, acy.com, that highlights that there is risk for the Australian dollar to as low as 65 cents. Now, that's not going to occur tomorrow, but I think there are signs that the trend might be already redeveloping, as it did from above 77 cents to 70.70, big bounce, a lot of enthusiasm at times, but it looks to be tiring again, hitting the odd air pocket, as I said in that written report this morning. So it may take a year, it may take 6 months, it may take 4 to 5 months, but certainly there's an opportunity there for traders, because that is what we do. We manage risk and we look for markets that are out of line with the fundamentals. And I think the Australian dollar is one such example at the moment. When we look at the export data, very scary. We saw ores down about, minerals and ores down about 16%. Remember, everyone thought our exports were bulletproof, mineral exports. And then our actual metals were down 23%. So there is weakness there for Australia going forward for our mining industry. And of course, this data was greatly influenced by lockdowns, but they are not the whole story, and they certainly aren't our export decline story. Imports were down 2% though, and a lot of that had to do with lockdowns. But of course, it's also due to global problems with shipping being far less efficient or available than it used to be, which is why imports were down 2%, but they were also down because there was less economic activity in New South Wales and Victoria. So imports will be bouncing back, but exports may not be. Now, if we get the decline in the Australian dollar, that will offset a decline in our exports, and so the country will remain relatively stable. But without that currency depreciation, we could be in for a really flat, neutral trade outlook over the longer term. Another reason for the Australian dollar falling is the recognition around the world that Australia is no longer the cool place it once used to be. It's a little bit obfuscating on the climate front, though we are doing better than what most people would assume we are, but we've certainly gone out of our way to, at the political level, alienate our biggest trading partner, and that fact is not lost on global investors who are a little bit cautious about the long-term Australian outlook in a world that still suffers significant supply chain disruption, and in a world where China is really actively seeking to buy its necessary products from other markets rather than its previous best friend, Australia, which obviously is no longer the case. So the overall outlook, I think, is bearish the Australian dollar, and when you combine that our Reserve Bank has been cited by the international body, the OECD, as being badly and urgently in need of a major review, both at the board level and the charter level, international suspicion of whether Australia really has its act together or not is increasing. So that sort of leads into, we know the Fed will be hiking rates in 2022. I forecast the RBA will be hiking rates in 2022, but it will be the Fed that acts first. And so that, again, the recognition of that reality is another downward pressure on the Australian dollar for the time being. I don't see any bullish factors for the Australian dollar at all. It would take a real falling out of bed of the US dollar, and that doesn't look to be on the cards. In fact, the US dollar looks to be reasonably firm and reasserting itself as for the moment, still the world's major reserve currency, but as I gave a speech at APEC in 2012, we are eventually going to move towards 3 equal reserve currencies, the euro, the yuan, and the US dollar. But for now, I think we're going to see further US dollar strength, and that's just another downward pressure for the Australian dollar. So certainly not looking good for the down under currency. Thank you very much. See you next episode. Thank you for watching. Clifford Bennett, Chief Economist, ACY Securities.